Okay. Hello, everybody. We are here for the first Market Live Open. Let me just tweet this out right now of 2023. 2023 Live Market Open, first of 2023. How is everybody doing? I hope you guys had a great New Year's. Nothing really changed for me, to be honest. I'm pretty much the same guy I always have been my entire life. So nothing really is different in my life. I don't know if it's different in your life, but in my life, everything's fine. Well, there's a little change. And let me just put this in my Discord. I don't know if you guys noticed it. You might have noticed from the thumbnail. Maybe not. Sanjay, good morning. Jason, good morning. The channel, let's go. Bro, you missed spots. What spots are you talking about? Bogdan says no beard. I have no idea what you mean by that argument about no beard. Cameron Investing, what's up? This dude shaves and his punctuality goes out the door. Okay. Kane Frost 2023, what's up? David Williamson, good morning. Here we are, everybody. It is 2023. We are here. Let me open some things up. First of all, I hope everyone had a great New Year's Eve. I shaved my beard live, and some of you probably joined for that. And I hope you enjoyed some of the watching of my beard getting shaved. I did it primarily because I wanted to do it. I mean, I did a Twitter poll about it, but I also did it because I was just like, why not? I think I've been kind of afraid of what I look like without the beard for so long. And I just didn't want to be afraid anymore. So it's kind of cool, the clean look. And as you can see, it's already growing back so quickly. Like, it's actually amazing how fast it grows, which I should have expected because I have to get a haircut every 2 weeks. But nonetheless, it's here. That baby face is good looking. Happy New Year's morning, Amit. Shoot me an address, mate. I will mail you a replacement beard from now. You're funny, Glitch Life. What happened to the beard? Who is this man on the grind? I like bad breaks. Yep. Look, I had to get rid of it. But as you can see, it's growing back so quickly. Like, you see this here, it's like a 5 o'clock shadow here. It's growing, and it's growing. Like, this is 2 days. It's already all this hair. It's going to be back pretty soon. I sometimes just rub on my face like a genie, like the bottle, like in the middle of the day when I'm working just for fun. I can see my jaw now, which is interesting. But nonetheless, that's how it is. How good does it feel to brush your teeth and wash your face? Oh, man, it feels amazing. And also, like, every water used to get into my beard all the time, everything. So there's Amit out here imitating his uncle. You guys are funny. All right, let's get into the news. It is 2023. First of all, put your comments below about what goals you have in 2023. Let me share my screen right now. You've got a lot of testosterone, bro. Yeah. Especially my voice is. I noticed in 7th grade, my voice was super deep. And it got there. Funny that you were trying to use that microfoil part of the shaver. Yeah, so this is what happened if you guys weren't here. Hold on, let me show you guys real quick, and then we'll get into the market open. So apparently, there's this part of the shaver, this part that actually clips like your beard, shaves it. And then there's this part that doesn't do anything. And I was using this part for 13 minutes before this part. Chris told me to use this part. And I was like, oh. And then the thing started going faster. So you guys can check that out. It was kind of funny. Oh, speaking of that, hold on real quick. Let me text Tristan real quick. One second, guys. I say freshly. And then. Okay. Cool. All right, here we go. So let's get into the market open. Here we go. Tesla is down 8%. Why is Tesla down 8%? Well, the reason, or sorry, not 8%, 4%. The reason Tesla is down 4% right now, 3.49% in the pre-market, is because they missed on their delivery targets. Now, their delivery targets, they expect to do 50% year-over-year growth. In October, that's what management said. They came in at 40.33%. As a result of coming in at 40.33%, well, they missed by 10%. And missing by 10% is never the best thing, but nonetheless, they missed by 10%. Now, their production is up 47% year over year, so they were able to make 47% more cars. Why is that relevant? Why is that important? Well, because it shows that the gigafactories are working, that they're able to actually get these cars out the door. They're able to make these things. Actually, let me share the picture itself so you guys can see the numbers broken down. But the deliveries missed estimates. And analysts are wondering right now, and by analysts, I mean like everyone on Twitter, FinTwit, is there a demand problem? Is there a demand problem for Tesla? So let's go right here. Now, there's a bunch of arguments. There's people are saying there's cars in transit. There's certain things that you can't ship every car that you make because there's like obviously supply chain problems, but still it's a miss, right? Q4 2022, they produced 439,000 vehicles, 20,000 Model S, 419 Model 3. They delivered 405,000. Overall 2022, as you can see at the bottom of the screen, they produced 71,000 Model S, a million.298 Model 3. They delivered 1.31 million. They produced 1.36 million. So, I mean, this is 3.7% below expectations in terms of how much they should have delivered or how much they should have, delivered based on their productions. But for the year, it's 40% growth versus 50%. Now, if Tesla is able to grow deliveries 40% for the next 7 years till 2030, they would deliver 20 million cars in the year 2030. Now, is that going to happen? I don't know. It's probably unlikely. 40% year-over-year growth for literally 7 years. That's kind of unheard of when it comes to the tech space, unless you're in the very, very, very beginning of it. And Tesla's just not in the very, very beginning of it anymore. I mean, they've been around for a while, and now you have a lot more competition, and you have the potential for demand to not happen. Additionally, the IRS is not giving Tesla the $7,500 tax credit on certain vehicles. We talked about that today on the Daily Cabal. We went really in depth. But that not happening is also not beneficial for Tesla by any sense of the imagination, because there are certain cars that, because of certain restrictions on weight or how many seats they have, 5-seater versus 7-seater, they don't qualify to be an SUV or sedan. And as a result, they're excluded from the $7,500 EV tax credit, which is a shame. And I think that'll change, but I mean, I guess we'll see when it changes, if it ever does changes. We have some other news as well as we get closer into the market open. SpaceX has received a $750 million valuation, round at a $137 billion valuation. They raised about $250 million back in June of 2022. And it seems like the company is doing phenomenally well. Starlink, one of their main products, is also doing well, which is allowing them to raise even more. So that's giving them the ability to raise even higher. Let me read some of the comments and I'll go to this article. Chinese EVs are coming from Chris. Maybe not that big in the US, but Europe and Asia. Yeah, that might be a case as well. Amit, can you try to cover SoFi's lack of brick and mortar stores and how that impacts growth? The average teller in most banks earn 30K to 50K per year. Well, the lack of brick and mortar is actually the point. That's like the good thing for SoFi. It's actually like the whole point of SoFi is to get rid of brick and mortar, because how many people go to their actual bank to a brick and mortar? Like, if that's dying out and that concept is dying out, then the whole concept of digital banking and personal banking is probably going to be a lot more sophisticated. Where is Amit? This guy looks different. Well, this guy is definitely looking different, but the same Amit is here in 2023. Here we go. SpaceX raising $750 million at a $137 billion valuation. Investors include Andreessen Horowitz. So last month, Bloomberg first reported that SpaceX was allowing insiders to sell at $77 per share, which would have put the company's valuation near $140 billion. They raised about $2 billion in 2022, including a $250 million round in July, valued at $127 billion. So now they are valued at another $10 billion higher from that $127 billion at $750 million. So in that case, that is close to, I think, another couple percentage points they're selling of the company. And Andreessen Horowitz is going to be leading the deal. For those that don't know, Andreessen Horowitz also didn't lead, but they participated in the $44 billion buyout of Twitter. I think they put in like $350 million, something like that. So obviously very big fans of Elon. Mark Andreessen, big fan of Elon, and they are supporting him in SpaceX. SpaceX is one of those companies that it's kind of like a no-brainer in terms of what they're able to do. They're launching a rocket every 6 days. That's insane. Starlink has over 1 million subscribers. The potential for that company seems massive. And I mean, that'll be a hot IPO when it goes public. And when it does go public, I mean, it's $137 billion right now. You could imagine it going to be like a $250 billion IPO, if not more, when they decide to go public. All right, here we go. It is January 3rd, 2023. First market open of the year. The market is now open. First cowbell of the year. Here we go. Tesla down 4%, 118. I don't know how bad these delivery targets are going to be in the context of Wall Street. I know some prominent Wall Street analysts reduced their targets from about $235 to $205, still have a buy target on it. But Tesla's down. Coca-Cola's down. Pepsi's down. Apparently, Bill Ackman is like against Coca-Cola and Pepsi on Twitter. He's like saying Coca-Cola and Pepsi called diabetes. The guy literally invested in Chipotle and Domino's, which they sell Coca-Cola while you buy your food. I mean, it's a very confusing thing. We'll go to his tweets in a second. S&P is up. We're starting the year up on the S&P. It's only the first trading day of the year, but the S&P is still up, 384, up 0.646%. Roku is up. Kevin's PP is down a little bit. Enphase is up a little bit. Ginkgo is up. CRISPR is up. AMD, NVIDIA up. Not up massively, but up a little bit. Amazon up. Google up. Again, not up massively, but up about 1%, 1.5%. Adobe is up. Microsoft, Coinbase 62. Coinbase 36. Microsoft 241. Snapchat 929. This was up from 830. It was stuck at 830 all of December, so it's up a little bit right now as well. So markets in general are feeling a little bit green. What is the news for that green? Honestly, I'm not sure. Probably just in general, the sentiment is a little bit friendly, but it's the first trading day of 2023. We'll see what happens. Tesla red on a green day, now crossing 5.4% red. Let's go to Palantir and see what they're doing. Palantir at 656. Palantir recovered pretty nicely from 595, which were the lows about a week ago, stuck at 656. I am starting to get more serious about thinking of getting and deploying some of my cash. I just am a little hesitant because obviously it's only been one day of 2023. I kind of want to see how this plays out. It's hard to imagine missing the boat on getting Palantir at 6 or Tesla at 120 or SoFi at $4 simply because of the fact that there is no positive catalyst for the next 3 months to have some massive rally, other than the fact that everyone thinks the next 3 months are going to be either flat or down, which is the reverse psychology for why it would go up. But from a pure like technical perspective, a catalyst perspective, inflation perspective, interest rate perspective, we wouldn't think that that's going to happen. Wake your ass up. Yes, wake your ass up. The SpaceX raise shows that Elon is the only show in town. He is the guy in the hardware space. There isn't much innovation going on in that consumer world of atoms. I agree. I mean, there are very few companies that are able to raise at 137 billion in the private markets after raising at 127 billion 5 months ago. I mean, the valuation going up by 10 billion within a couple months means that that SpaceX is doing something that very few companies. I mean, is there a competitor to SpaceX that's a real competitor? Because I don't think there is any real competitor to SpaceX or any competitors that are doing anything meaningful like SpaceX. I mean, there's a rocket launch every 6 days. Like that's a bit insane. Who is this guy on Amit's show? Where is Amit? Amit is still here. OMG, you look 14 younger. Who is this kid? Where is my Papaji? You guys are funny. You guys are really, really funny. I don't think it's that different. I mean, it's different, but it's not that different. Let me pull up some CNBC real quick. It's different. I get that it's different. I just don't think it's that different. But it's different. I just don't know how different it actually is. Okay, let's see this. So, well, do we want to show that one? Let's see this one. This is a day old, but I still want to see how I actually didn't see this. Warren Jeremy Siegel still against the Fed, bullish on stocks in 2023. Now, Tom Lee came out with some analysis as well, saying that the market's probably going to go up in 2023. No surprise. It's Tom Lee saying the market's going to go up in 2023. But nonetheless, it's still okay. Your lips do move when you're talking. You guys are actually very funny. SpaceX launching rocket right now. See, like that's why they get valued at 137 billion, because they're able to launch rockets all the time. All right, here we go. Let's take a look at Jeremy Siegel and what he has to say.
I've never seen so much bearishness. There's never been a time when 60% of economists forecast a recession, and when everyone's on one side, I get very wary. I think there might be some really surprises next year. Let me tell you, 2022 was marked by very good job growth and very poor GDP growth and very poor productivity growth. Firms were hoarding workers because they worried they couldn't get them. I think we may see the opposite next year. I think we might see actually the job market loosen up dramatically, even job losses but that GDP grows much faster than most people think. And we have a chance, if the Fed pivots, to really avoid a recession and have a good year for profits. Because if productivity comes back, Scott, that puts downward pressure on prices. It puts upward pressure on margins. And everyone who says, "Oh my goodness, these 2023 estimates are way too high," might be surprised that many of them might turn out to be what profits are going to be.
Well, I listened to everything you just said, and it all makes reasonable sense, I'm sure, to some who are trying to be as bullish as you obviously are yourself. But the four words that we need to discuss further: if the Fed pivots, those are the four words you used within what you just said, because most people don't think, Professor, they're going to, and that seems to be the whole ball game, that the people who think that stocks are going to do better than many others keep talking about the Fed pivoting, where the Fed seems to be explicit in not only are they not done in the hiking, but they're going to keep rates up before they do anything for longer than people think. How do you respond to that?
I respond to that, Scott, because I was with you a year ago, a little more than a year ago now, the September 2021 meeting, where they said, "Oh, we're not raising rates in 2022. They were very, very firm on that. Inflation was transient and it would be a mistake to raise rates. Why should everyone believe the Fed? When in fact, the Fed has not done anything that they told us that they were going to do over the last 18 months. Now, I think when this data comes in, we take a look. We talk so much about what's going on in prices. I think the Fed is finally getting into that its housing indicator is way lagged and that house prices are actually going down. And once you put in actual house prices in those inflation numbers, as I said 2 months ago, really inflation disappears. I think that's going to get through to the Fed. I think more people are going to be talking about it. And let me say, there's 200,000 expected gain in January. I'm not a prognosticator. If you get a job loss or a jump in unemployment rate to 3839, you're going to get a different tone from the Fed. They're going to get calls and saying, "You know what? The last market that you're worried about, which is the labor market, is finally loosening up." And that is the last reason that they have to stay as tight as they are. And I think that message is going to get through.
Now, Jeremy Siegel thinks that housing data hasn't been included within the Fed, and that's why they're lagging behind on inflation. There's someone else out there in the world that also agrees with him in the context of the Fed is doing the wrong thing, but has a little bit of a different take on this. Let's take a look at Michael Burry. Okay, this is what he tweeted yesterday. Inflation peaked, but it is not the last peak of the cycle. Meaning, so we had 9% inflation back in June, but Michael Burry says that's going to come back. It's not the last peak. We are likely to see CPI lower, possibly negative in second half of 2023. Meaning CPI is at 7% right now, 7.1. Burry thinks it's going to be negative, meaning we're going to enter deflation at the end or within 6 months, right? Second half of 2023 this year. And the US will be in a recession by any definition. So even CPI being lower will lead to the US being in recession. Then he says the Fed will cut rates. The government will stimulate, so sending out checks like they did during COVID. And we will have another inflation spike. It's not hard. I think this is the most idiotic tweet I have ever seen in my life. Not only is he saying we go from 7.1% down to negative inflation, which, by the way, is not easy to do. We don't just deflate that easy with everything going on, still have energy problems, still have geopolitical crises, still have things that haven't been factored into a lot of the readings for the CPI, the housing market. There's quantitative tightening. Like there's a trillion reasons why CPI can go lower. I think it'll definitely go lower. I just don't think it'll be negative by June. Like, I think by the end of the year, if we get to 4%, that'd be phenomenal. And, maybe we can go lower than 4%. Maybe we're stuck at 5.3%. But to say it's negative is a bit insane. I feel like you're just saying that to say that. Then he says the Fed will cut and government will stimulate in a In an election year, which is going to be within a year, right? So 2023, we're going to lead up to all the campaigns. I don't think the Republicans and the Democrats are going to have any form of agreement to do something unifying for the American people, much less spend more money after all the money we spent in 2021 and it led to inflation. Like, I think the average American would rather we not send a stimulus check if it's going to lead to massive levels of inflation. Also, the Republicans have the House, so like they're not gonna just pass this policy and give Biden a win in an election year. So this makes no sense to me. I admit you're wrong. Burry is right. Okay, let's see if Burry's right, because if we have negative inflation by the second half of 2023, then yeah, I'm an idiot. But to imagine we go from 7.1 to negative, that to me is a bit insane. That's a little insane. Now, granted, we can reduce inflation, but the idea then, I'll give him inflation goes to zero. Let me give him that. Then the government stimulates and we pass out checks. I don't know. I think we cut interest rates and that's enough for a lot of stimulation to happen when we're cutting interest rates. I don't think we have to. The reason we gave checks is because there was a pandemic and businesses were shut down. So interest rates being cut didn't even help people like start new businesses, which is the whole point of interest rates being shut down, right? You take more risks and stuff like that. You buy more properties because the world was shut down. And that's why we sent out money to people so they could like spend more. I just don't think that would be the case this time. I do not think that would happen at all. At all as well. Burry is definitely wrong about stimulus. Yeah, I fundamentally disagree with that. I don't see stimulus check. And now, granted, the government can stimulate the economy in a different way. It doesn't just have to be stimulus checks. But like, I just don't think that's going to happen. Inflation is year over year. Yeah, Chris, that's fine. But like, I don't think inflation's going to negative. I think that's insane. Is it possible? Yeah. But that means you have to believe that there is so much in the system that's not being factored in, or so many catalysts that are about to happen that will push it over the edge. I just disagree. I don't think that's going to happen. You sure he didn't mean quantitative easing? I mean, yeah, right. He could mean quantitative easing. I get it. But also it's a little, so the Fed, now granted, this is the bull case for Michael Burry's argument. The Fed has historically always been wrong. They were wrong on inflation was transitory. They've been wrong many times in the past. 2018, 2019, they were wrong as well. So in this scenario, Jerome Powell said up until 2025, don't expect below 2% inflation, which means don't expect really any significant interest rate cuts for at least the next year, right? Much less a year and a half. If Burry is right, based on the premise that the Fed historically has been wrong, then everything that Jerome Powell has said for the past 6 months is going to go to shit, because interest rates will have to be cut if inflation goes down to negative. Like, you cannot have interest rates at 5%. That's impossible. Quantitative tightening will have to stop. Quantitative easing will have to begin, and we're going to go back to the moon again. It just seems ridiculous to me to assume that after 15 years of a bull economy with very small hiccups, that we have 1 year where we're down 20% on the S&P, which is nothing in the grand scheme of things. On the average, the dot-com bubble and the S&P in 2008 declined 58%. And then we just go back to the moon in the next 6 months. Like, that doesn't seem like that's how it's supposed to happen. It'd be very hard to imagine it happening. You don't have to send out checks to stimulate. Yes, you can do other things to stimulate. It just, it would be weird to see them stimulate right now. If you're still broke after a decade of nearly zero interest rates, why is the Fed going to come save you now? Well, yeah, I mean, in general, the economy should be good enough to help people have good jobs and all this stuff if we have zero interest rates. I just don't see it. We're at what? Almost terminal 5%. I don't imagine that going away that quickly. Like, that's just hard to imagine at the end of the day. It's not easy to just see that happen. Let's go back into the market and let's see this. Amit, your counter argument is your feeling about this. Well, the counter argument is more so the fact that interest rates, that inflation. So the logical counter argument is that it's harder to go down from something when you're already down. So, like, I mean, the classic example that I've been using is if you're 200 pounds, it's easier to go to 150 than if you're 150, it's easier to go to 100. So if inflation went down from 9.1 to 7.1, yeah, that's easy. That's like way easier. Everyone could tell the reason the market rallied in June when inflation peaked was because everyone knew inflation peaked. We're like, we're not going above 9%. It was very obvious, which means we're going to have to come down. But to go from 7 to negative, it just doesn't seem like it's logical given math. Which means if that's the case, then the Fed is not going to stimulate. And oh wow, Tesla down 6%, by the way. And if the Fed is not going to stimulate, then Michael Burry is wrong about this thesis that, he said inflation will peak again after we stimulate. So he said we had 9%. It's going to go all the way down. The Fed's going to cut interest rates. We're going to do quantitative easing, send out checks, whatever we have to do. Then inflation is going to go back up again. I do not see that scenario happening. I think it is a bit improbable. And as bad as the Fed is, I do not think that happens again to the point where we double dip inflation to the point where we go 2 years of trying to resolve it and then it goes right back up again. I don't know. I don't think that happens. Tesla now down 7.14%. So it is hearing the brunt of some pain. Let's go to Gary Black's Twitter and see what he's talking about. He is a big Tesla bull. And let's see what he's saying. Gabe's comment, admit if the Fed pivots before inflation is below the Fed fund rate, I will shave my head bald and say Chris Patel is a genius. Yeah, I just don't think it's going to happen. Speaking of stimulation, how are the ladies digging the baby face? You know, I've had some ladies text me that they actually do like the baby face. I'm not going to lie. I had one lady text me saying that she liked the beard better. So, you know, it's kind of 50-50, I guess. Gary Black. I wonder what Gary Black would think of my beard. Speaking of Gary. All right, here we go. Let's get into it. Shout out to 303 people being here. Thank you guys all for joining me for the 2023 first market open. And we have a very exciting day with everything going on in Tesla world. So let's read some of his latest tweets. Tesla Wall Street 2023 non-GAAP EPS now $5.19. So he is he's saying on Twitter, I don't know if he's estimating, but he's saying that 2023 EPS earnings per share will be $5.19 at the pre-market price of 118. That's a 2023 PE of 22.3x. So the way you calculate that price is 2022.3 PE times the EPS. It's the lowest one-year forward PE ever in Tesla. That's correct. If we have confidence Tesla can grow volumes and EPS over the next 4 years at 35%, Tesla is too cheap at 22.3 times 2023 EPS. That is correct. Now, granted, you have to take it with a grain of salt because Gary, this is the biggest stock in Gary Black's fund. So he obviously has some thoughts about it. Let's look at some Wall Street estimates on it. Goldman's Mark Delaney cut his 2023 non-GAAP EPS by 10% to $4.50 earnings per share from $5. So he cut it by 10%, and his price target to $205 from $235. So he kept his buy rating, but he decreased his price target. He says, we believe key debates here from will be whether vehicle deliveries can reaccelerate and if margins can keep up, which is the key debate for everybody. And I guess we'll see how that happens. We continue to, so this is what Tesla said in their press release. We continue to transition towards a more even regional mix of vehicle builds, which again led to a further increase in cars in transit at the end of the quarter. What they mean by cars in transit is like, okay, if we make a car in China and we ship it to Germany, that car is in transit. We can't count that as a delivery because it was never actually delivered. It's in transit, which may be somewhat of an explanation for why the deliveries missed by 10%. But it's not like the best explanation at the end of the day, which is why a lot of analysts are kind of freaking out. I meant to use tip ranks. I've used it before. I don't pay for it, but I've definitely used it before. It's definitely a good service. Deaf beard is better, more mature look. I agree, Ramu. I like the beard. It's better. Tom and Gabe don't count as lady. I'm not talking about Tom and Gabe. Goodness. By ladies, do you mean Kelly? I'm not only Kelly. Goodness. There's other ladies in my life, guys. Wow. What does Mama say about the new beard? She loves it. My mom always thought I looked like a terrorist with the beard. And you guys can say whatever you want of that, but that's my mom. And she said that to my face. She was like, you look like a terrorist. I'm like, but Mom, the ladies like the beard. She's like, I don't know if ladies like a terrorist. So that's just how it is. And so she's very happy that it's down. Tesla, I just got the notification from Robinhood, is down 7.4%, now $114. We are about to touch 113. We'll see if it happens. By the way, I can make the terrorist joke because I'm Indian. And I got called a terrorist my whole life growing up. So I kind of have the, I believe, freedom to make that joke. Apple at 128, Meta at, wow, Meta rallied up a little bit. It was stuck at 116 past couple days, 123. Look at that. Spotify. Oh, I found a really good article, by the way, on Spotify from Yahoo Finance. I'm interviewing a Spotify bull this week. If you have any questions, let me know in the comments. The guy has 14% of his holdings in Spotify, so it's a top holding for him. I found a couple of articles yesterday I was reading just like on the bull and bear case. And, you know, one of the articles that I saw did a lot of good numbers, and they said the upside is $86 for Spotify. It's at 80 right now. So Spotify was a $320 stock at one point. And, you know, again, I know a lot of people say I'm a little bit of a Spotify hater, but it's just, I look at a lot of the metrics. When you go through the numbers, you start to realize this is a business that has a lot of fundamental structural issues. And by the way, I think the stock is undervalued. I think it'll go from 80 to like 100 because like the market's euphoric. And when the market goes up, Spotify will definitely go up with the market. I just don't think there's anything fundamentally there for me to be excited for this to be a top holding. Like when he said it's a top holding, I was like, out of all the stocks in the market, I understand why people, are like, oh, you're down on Palantir. It's like, but I think they understand why it's my top holding. It's like, you can have conviction behind the stock. Tesla, you may be down on, you have conviction around Tesla. AMD, you may be down on, you have conviction around AMD. Apple, Meta, you could be down on them, you have conviction around them. To be down on Spotify and have that be your top stock where you have conviction, well, it's definitely an interesting perspective. It'll form an interesting conversation. So if you have any questions, let me know and I'll ask him that. TSM, Taiwan Semiconductors down at 75. Netflix 293. Netflix still too high in my opinion. Let's go to Bill Ackman's tweets while we're loading this up and we'll talk some more about this. There's no such thing as a Spotify bull. There's only Spotify bag holder. Yeah, I think the dude is definitely holding a bag and he's doubling down on it. And I'm like, I don't get it. I don't get it at all. Like the article I read yesterday on Yahoo Finance, it wasn't just like an opinion piece. It was a very long, in-depth article talking about the problems with Spotify. And after I read it, I was just like, I just don't understand how you make this a top holding. Okay, so this is what Bill Ackman's saying. Coca-Cola and Pepsi have caused more harm to global health than likely any other company. Just look at the correlation between diabetes, obesity, and soft drink consumption. It is remarkable that the plaintiff's bar has not yet won a massive judgment against them. No, I don't have any economic interest, long or short, in any soft drink company. Bill Ackman, I'm starting to realize, is one of the weirdest figures ever. He called for basically World War III in February. I mean, literally, the guy was advocating we should go into war with Russia. Guess what? We didn't listen to him and we kind of avoided a world war. I'm not saying everything's perfect, but we didn't listen to him. Second of all, he bought Netflix at 320, went all the way down to 160, sold out of it. Now Netflix it basically went back to 320. I know it's at 293 right now, but he could have broke even on Netflix if he just stayed with the thesis, but he destroyed it. He seems like such a short-term, irrational, quick thinker. I know he's a good investor, but it obviously wasn't the best. And then Joseph Carlson had a great response to him that I want to show right here. I thought this was like a phenomenal response that he had to Bill, which is here. These are the top 4 holdings of Pershing Square: Lowe's, Chipotle, Restaurant Brands, and Hilton Worldwide. He has 6 stocks, $7 billion portfolio value. These are the top 4. All of them sell Coca-Cola and Pepsi. And so Joseph responds right here. He also just recently sold Domino's and Starbucks, and he owned Mondelez in the past, but he's raised no concern about the true cost of these companies. To imagine Coke and Pepsi do worse for diabetes than Domino's and Starbucks and Mondelez, which makes Oreos and Chips Ahoy. I mean, that's a little, it's hard to imagine, right? So I guess the question is, why is Bill Ackman tweeting this stuff? Why is Bill Ackman tweeting this stuff? That is the question that I have. Bill Ackman takes short positions and then runs his mouth to the media, but he says he's not short on any of these soft drink companies. So what's the incentive here? Dude is a sleepy piece of ass. If Ackman was on fire, not Chris is low key like Chris has some dog in him. Bill is a good investor because he can sway public opinion when he's given a platform. Yeah, but the problem is your public opinion starts to decline, or the legitimacy in the public opinion starts to decline a lot as you keep saying these like stupid things. So it doesn't make too much sense. Tesla buys a car company and sells a big tech company, FSD Energy. Tesla bought in the future. We did a good podcast with Finance Junkies over the weekend talking about FSD and Tesla. So I have a Tesla position. It's about like 10 shares at 220 average. I think it's a little bit lower than that now, like 218 average, something like that. And I'm thinking or not whether I should build out the position. I have some money ready to build out the position. I'm just thinking like $5,000 into Tesla. That would get me how many shares right now at 114? $5,000 at 114 would get me 43 Tesla shares. So I would have 50, let's call it 60 shares. I'll round it up to 60 shares. This is the thought I have to have now is like, and I know $5,000 is not a lot for a lot of people. For me, it's a decent sized position given my portfolio. Is 60 shares of Tesla, the average would probably be closer to like 115, maybe 120, worth it right now? That is the question. And in all honesty, I think it is. Like, it's really hard to imagine it's not. The delivery numbers being missed by 10% is It's not great, but it's not horrible because there's very few companies growing by 40% year over year. The problem, the icky part of this is like, did someone know? Because Elon was selling, other insiders were selling, like we saw a general sell-off. Did somehow the word get out that this 50% guidance was not going to be met? And that 40% guy, because like retail is left holding the bag with this, right? Like you say you're going to do 50%, then you do 40%. And yes, 40% is good in a recessionary year in the macroeconomics that we're in, but it's not 50%. And, you know, this is the street moves on these guidelines. Now, granted, if you have a long-term view of Tesla, 113 doesn't seem like a bad price. So that's the question I'm struggling with right now. I'm also very hesitant to buy because it's so early in January. And I'm like, I don't want to make the mistake of just buying, because I did that with ARK. I bought ARK at $88 back in February last year. And it was really stupid because it was like, why are you buying ARK at $88? Like, it just like, I thought like, hey, ARK is going, and Roku wasn't at 40 at that point. Zoom wasn't at 70. Coinbase was not at $36. So you thought it was a good deal being down from 156. And then it just kept going and going. And you're like, all right, this is stupid. So that now one thing you could do is just sell cash secured puts. And that way you get some premium. And then if it executes, you get the shares. Tesla will get down to 70. See, I don't think that happens. I don't think it goes that bad. Like, I see your point, Gabe, and you're not alone in thinking this, but that's the other, like, that's the other thing. You're like, well, if the S&P goes down to 3,200, Tesla's not surviving that. Tesla's dropping. He's down. And so that's when it would happen. But I guess we will ultimately see what happens. Tesla said average 50% long-term, 0% average means that half the time you'll be under 50%. Last year they grew over 80. Yeah, so the last year they grew over 80%. This year 40%. So obviously we're seeing it go down. I mean, this is what Palantir's Alex Karp said as well, right? Alex Karp said that Palantir grew their governmental business 30% year over year. And some years they were at like 0% growth. Some years they were like 70% growth, right? So the government business CAGR'd 30% after 10 years, but it took a while for that to happen. Noah, the answer to your question is I did not. I don't know why, but I did not. I can see Tesla at $90. 90 is more reasonable than 70 to me. 90 is a lot more reasonable than 70. But we are going to see what happened. Your grandma probably drank it when they used real sugar, not this high fructose. Yeah, that's true, man. They used to have real cocaine back in Coke, right? Like, is anyone old enough to remember those days? That was wild, bro. You drink a can of Coke and you get some cocaine. That's wild, bro. That has to be insane. All right, let's take a look at this. So let's get a little bit of Tesla coverage and then we'll go to some inflation stuff. Let's see what the mainstream has to say about Tesla. And then we'll get into some inflation stuff. Thank you, 330 people, for being here. I appreciate it. 340 now. Thank you for spending your morning.
Time to go inside Tesla's year-end production and delivery numbers. This morning, Tesla's stock is down nearly 5%, or 4.1% at this point. And JP Morgan cut its price target to $125 from $150. Also, Truist Securities cutting its price target to $299 from $348. Even the $299 is well above where the stock trades right now at 118. Let's get over to Phil LeBeau. He has the details on this. Phil, good morning.
Good morning, Becky. And the commentary from analysts is mixed this morning, largely because they say, look at these numbers. Even if you are a bull, you cannot be optimistic about the numbers that Tesla reported for the fourth quarter and for all of 2022. For the fourth quarter, the deliveries came in below consensus, which was for 417,000 vehicles to be delivered. They were delivering 405,000 total for the year, 1.31 million. That's also below what the expectation was. Here's why that's significant. That 1.31 million, that's growth of just 40% compared to deliveries in 2021. Remember, the company's general guidance, which they gave, I want to say about a year and a half ago, was that they would have average 50% annual delivery sales growth. Well, this is clearly not 50%. Now, Tesla bulls will say, well, look, they said they would average that over many years. So you're going to have some years where it's not 50%, but 40%, that's well below expectations. The problem goes back to China. We talked about this in December, and really at the end of November, you started to see the sales pace slow in China for a couple of reasons, COVID restrictions being a primary one there, but you also have greater competition and it's forced the company to cut its prices, whether it's in China or at the end of December here in the United States. That's going to be weighing on margins. So as you take a look at shares of Tesla, remember that the fourth quarter results will be reported just about 3 weeks from now, January 25th. Two things are going to be in focus between now and then. First of all, does Elon Musk say anything about the annual delivery guidance? Do they bring it down? Do they say, look, in the future, it'll just be 35 to 40% annual delivery growth? Or do they also talk about the impact of margins and the compression that they're going to be facing? I don't expect any commentary pre-earnings about margins, but they may say something about delivery guidance, though it's more likely we'll probably get that when Elon Musk does the earnings call on January 25th. If he does the earnings call. I suspect he probably will. So we'll be covering this all day long, guys. Not surprising to see the stock under pressure, given the fact that these numbers came in short of expectations.
You know, the margin question is really interesting, especially with the discounts they were offering to have people deliver, accept delivery by the end of December. And then I think there are additional ones in China to receive by maybe the end of February.
Right. So the question becomes, do they start doing more of this in the future, Becky? And you know what that looks like if Tesla starts doing this on a regular basis? Traditional automakers. And for a long time, that was the thesis for Tesla bulls. They are not a traditional automaker. They won't have to get into the incentive game like everybody else in the industry has for decades. Well, now your question becomes, you did that at the end of this year, and yet
man, Tesla. We're gonna look at an inflation thing real quick, but let's just pull up the market. As he was saying, guidance was supposed to be 50% annualized. Now it's 40%. So if they miss the next earnings, I mean, they're gonna have earnings at the end of January. If they miss the earnings after that, and by miss I mean the delivery comes in slow, production comes in slow. Potentially EPS takes a hit because of margins, which I don't think would happen unless they lower prices massively, but we'll see. Then Gabe's argument about Tesla getting down pretty dramatically is not out of the picture. And that's also why I'm hesitant to build out a position right now in DCA into this, because it's like, well, you got it. Like, here's the thing. Now they effed up. And so you got to see if they continue to F up, right? It's one thing about a company effing up and you're like, oh, it's just a small little thing. I'm going to buy the dip. I'm going to move forward versus a company potentially having a trend of effing up. And that trend is not because Tesla's a bad company. It might just literally be because demand is going down. We're entering a recession. The cars are too expensive, even for the user base they're talking about. They're not getting the EV tax credit, and that's a whole nother issue. And competition might be coming. Those are potential externalities that might influence the role of Tesla not being able to get to where it needs to be. And so that may lead to a trend of it effing up even more. And if it F's up even more, then you're going to get a better price on it, right? And that's what we saw with a bunch of companies in this year, right? They effed up in Q2, everyone bought the dip. They effed up in Q3, no one bought the dip. Because we were like, well, we think they're going to F up in Q4. So we're going to see what happens. Spot is trading at just a one price to sales ratio and probably raise prices soon, which would go straight to the bottom line. No, DT Polaris. So I think you're a little bit off on this question. If they raise prices, that does not go to the bottom line. That goes to the record labels. Remember, this is the structural problem with Spotify's business model. They have their content coming, the majority of their content all coming from record labels. Right? From music, right? The podcast stuff doesn't really matter because that doesn't make any money. That doesn't create that much activity. So if all your money is coming from the record labels, when they increase prices, they have to do price splits with the record labels. How do I know this? Because in the article I was reading yesterday, Spotify at one point in 2017 tried to sign artists directly. Meaning they went to certain artists, they said, hey, just sign with Spotify. Don't sign with Sony or UMG. And Sony, UMG, the big record labels, they almost threatened to take away their entire catalog from Spotify. It was one of those things where it's like, do you know who the F we are? It's like, we are the reason you guys even have content. Don't even dare start this trend of just signing artists independently, because we will take Justin Bieber, Taylor Swift, Beyonce, Michael Jackson. We will take all of these guys and we'll throw them on Apple if you even think of doing that. And Spotify can't afford to lose to Apple because Apple doesn't even make money off Apple Music because they can subsidize it. It's a loss leader for all their other services that they sell. So that is you know, that's why it's hard for me to imagine that them raising prices leads to the bottom line. Netflix can do that because they're starting to make original content and they're not licensing as much, and they don't have any like exclusive licensing deals where they have to share parts of their profits from subscriptions. They pay for it, a licensing fee, and they get the content. Music is a whole different business. Music is not like movies. It's not like shows. They have to do it in a different way. Gabe did make a video on Palantir yesterday, so I would definitely, everyone check it out. Type in GS Strategies on YouTube. Gabe, I saw you were live. I caught like 2 minutes of it, and then I had to go. Yesterday, guys, I slept at 10 p.m., and I swear I felt, it was one of the first days, I think, probably in like 8 months that I slept at 10 p.m. because I knew I was going to be able to wake up early. So I got some work done early in the morning. And I woke up at like 5 a.m. Next time I want to see if I can wake up at like 4:30 a.m. But I slept at 10 p.m. like a baby. I did have to take a little bit of this melatonin. I'm not going to lie. I took 5 milligrams of this melatonin. It knocked me out. And it was a really good night. So that was that is that I'm going to try to sleep every day now at 10 p.m. Like 2023 is the year of sleep and waking up early. Because staying up all at 1 a.m., 2 a.m. was fun in 2022 because, you know, but like it's I just don't think it's reasonable anymore. I don't think it's reasonable anymore. Okay. We're going to take a look at one more video and then we'll be done for today. Admit do not curse, you will get demonetized. Yeah, apparently YouTube put out some rules saying that we're going to get demonetized if you curse. So that's not a good thing. Doesn't that violate anti-competition laws? It does, but unfortunately, it is. Sony threatening Spotify. Yeah, but that's business, Toby. That's the problem. All right, last, let me do one plug, guys. This is my one plug for the stream, and then I'm out. January 13th, last day to invest in my startup. The link is in the description. You guys can check it out. I just got off a call last night with a director of analytics at a pretty fancy company in New York, who found me through Twitter, by the way. Didn't even find me on YouTube. And he reached out, gave him the pitch yesterday, and he really likes the idea. We had an hour-long call. He's thinking of seriously investing, primarily because he realizes there's a massive gap in the market that YouTube is not fulfilling when it comes to audio, that Spotify is never really going to be able to fill because they're like Netflix of audio strategy. And that's the potential for a young little startup to potentially expose it. So if you guys want to check it out, link in the description. Email amit@audia.io or DM me on Twitter, and we can set up a Zoom call. Last day is actually Jan 13th. After Jan 13th, there is literally no way for us to legally accept money. So there's 10 more days left. After that, I will never be able to give the opportunity again because it will be over. So if you guys want to check it out, let me know and you can contact me. All right,
Let's get back to the
inflection year for the stock market. Let's take a look at this.
broader markets, talking about where we ended last year, what that could mean for this year. Joining us is Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. I guess there's some things on the calendar that technicians pay attention to, but in general, I would imagine there are overriding factors that have nothing to do with what month it is or what year it is. So has anything really changed since last time you were on, Katie, in terms of looking for, I don't know, more sideways activity with potentially testing the lows with across the board in stocks and bonds and crypto?
Yeah, we've really seen no improvement relative to our last discussion. We were looking for some firmness into year end, and that was based in part on the so-called Santa Claus rally, which is actually still in force today and tomorrow. So we expect more firmness this week.
Guys, I'm actually going to pause this video real quick and go to a different video because I think I meant to click on a different video. This is the video I actually meant to click on about inflation, not the, I think I saw inflection and instead of it and clicked on inflation. So let's go to this video. This is the one I wanted to look at. Inflation will come down because of supply side issues. Let's see if Michael Burry's thesis is any legitimacy here.
David, how persistent do you think inflation is going to be? And take us inside the mind, if you could, of Jay Powell and how you think he's thinking about it.
I think inflation is going to be coming down because a lot of the supply side problems are easing. The price of shipping a container across the Pacific has come down. Used car prices have fallen for 5 months in a row. Housing prices are beginning to soften. But I don't think it's going to come down fast enough for Jay Powell to relax. I think Jay Powell very much wants to avoid being seen as the Fed chair who let inflation get out of the bottle. He doesn't want to be the guy who undid all the progress that has been made since Paul Volcker's years. So I suspect, they pretty much have baked in another 75 basis points. And I suspect they'll go higher because I think he wants to err on the side of doing too much rather than too little.
Joel, what do you think?
Well, I think that throughout all of this, it's unfortunate that the chair of the Fed, Chair Powell, has not accepted responsibility for the situation we find ourselves in. Were it not for the Fed printing trillions of dollars to fund the explosive growth in federal spending under both Presidents Trump and President Biden, we would not be having the inflation that we're experiencing today. And even if those inflation rates ease off of those 40-year highs that we saw last year and come back down to say 4 or 5%, that does nothing to relieve the pain of the middle class that now have seen their real wages decline by more than $6,000 over the past 2 years.
David, you think that he needs to take more responsibility? And what does that mean?
I think he's actually been, by Fed chair standards, fairly candid. When he spoke at Brookings a few weeks ago, he said flatly, we made a mistake. We should not have said that we would keep interest rates low despite falling unemployment until inflation started to pick up. So, yeah, I mean, the guy hasn't exactly gone out there and flagellated himself, but compared to, say, Alan Greenspan, who I think admitted one mistake in 20 years as Fed chair, I think he's done that. I agree, though, that when we do the anatomy of what went wrong here, that the Fed was slow. They didn't react when fiscal spending was a lot more than they had anticipated. And I think that's going to be a factor now. I suspect the last burst of federal spending, the stuff that recently passed, will add another 0.25 percentage point to the Fed's terminal rate.
Joel, you satisfied with that response?
I know, because if you go back over the past 2.5 years, it was the Federal Reserve coordinating very closely with Congress, with President Trump, and with President Biden to ensure that the explosive growth in spending on the federal level would be financed by the Federal Reserve, printing trillions of dollars to purchase government bonds, and of course to also inflate the housing market by purchasing trillions of dollars in mortgage-backed securities. The primary issue here is not that the Federal Reserve has reacted too slowly by raising interest rates, it's that they actually worked hand in hand with Congress in a disastrous manner that ensured that we would have this huge burst of inflation that we experienced in 2022. This was forecast by many, not just free market economists, but also by President Obama's former top economist, Larry Sumner. So for the Fed to refuse to acknowledge their role in this because of all the money printing, that is a travesty.
Wow, right when the video ends, the camera dies. This is let me change this real quick. This is actually what happened on the live stream. And I was shaving myself. All right, so that's pretty much it, everybody. That's I mean, we'll see what's going to happen with inflation. Obviously, we have one part of the camp that says it's going all the way down. We have another side of the camp that thinks it's going to be stuck forever. Real quick before you guys go, this is what I spent my New Year's doing. Pretty much this. That Tom had the funniest comment. He was like 200 people watching an idiot shave his beard. This is what I look like with the mustache. You see, I don't like it. People were like, keep the. I was like, no, man, the mustache. It makes me look like an adult film movie star producer. Like it didn't. And see, this is what I was doing. Yeah, see, this is what Tom said. You look like 1997. And this is what I was doing in the beginning. I was cutting with I wasn't using the right. I was cutting with the stubble side. I was trying to cut off the beard. I didn't know there was another part to the shaver that you have to slap. It was an interesting weekend. And then ultimately we got to shaving. Literally I was shaving right here. This is how I spent my weekend. So for the people that joined, it was an epic stream. I appreciated you guys being here, watching me shave. It was super cool. I think we became even more closer of a family. And this was me fresh after shaving. So, all right, that's pretty much it. Thank you, everybody, for joining. First market stream, 2023. Got it in the books. Looking like a Bollywood star, brother. I appreciate it. Check out the link in the description if anyone is interested in investing in my startup. $100 minimum to invest. So if you want to throw something at it, you can. Again, you can email me, be on Twitter. We can get on a call, talk about it. And that's pretty much it. Gabe says, are you growing it back? I will not be. No, I will be growing it back. So I'm not shaving for a while. So we're going to see how this grows out. We're going to see how long it takes. I think it'll take a couple months, but we'll see how long it takes. All right, that's it. Everyone go check out Gabe's video on Palantir and a couple more videos a little bit later today. And I'll see you guys tomorrow on the market stream. Bye, everybody.